Welcome back for another comp price prediction analysis, and in this video I will be sharing my next price target areas and also give you reasons why comp can see another massive run up to the next key area of resistance at around the $45 mark. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, comp is holding above the 20-day MA here on the 1 hour chart, which is now acting as support for us to continue gearing up. We have also continued to obey the Elliot wave structures, where you can see that on the 11th of September we saw this massive breakdown in a move that gave us a low at around the $34.88 mark. And after seeing that low, you can see that we saw this massive run up in a move that has now given us a high above the $42 mark, in what I'm terming as the formation of that first wave to the upper side. So we can term this as a wave 1. Then we started a corrective structure in the formation of this wave 2, and there are chances that we also have a low in place for the second wave. And in the next coming hours, we might continue gearing up in the formation of that wave 3 before we can expect a wave 4, then continue gearing up in the formation of that wave 5. And to show you that the second wave might have bottomed out over here, using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, I get a minimum target area between the fib level 0.5 and the fib level 0.618, and I can mark that target area, which is an area that we didn't fully maximize, though you can see that we are seeing a reaction of that, and we are seeing that bounce to the upper side. And there are chances that we might continue gearing up in the formation of this wave 3 as we react to this target area, and giving you target areas for the third wave by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. I get a minimum target area for the third wave at the fib level 1.618, and that is at around the $50.02 mark. And that will be suggesting that maybe in the next coming hours we might continue seeing further upside, see a break above resistance at around the $46 mark, get a successful retest, and continue gearing up to the $50 mark, giving us the high for this wave 3 before we can expect a wave 4, then a wave 5 to the upper side. Alternatively, there are also chances that this might still be a second wave that is still in formation over here, and maybe this is an ABC corrective structure that is forming, where we can term this as a wave A. So we can term this as the wave A. Then there are chances that we are seeing that wave B to the upper side before we can expect that one more new low in the formation of that wave C, fully maximizing the target area for the second wave. And if that is the case, then giving you retracement areas for the second wave, that is the wave B, using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1. I have a target area at the fib level 0.618 and the fib level 0.5, and that is between the $40.58 mark and the $40.13 mark. That is a very significant area that we need to keep our eyes on, because a break above that, then that will be suggesting further upside to the next key area of resistance at around the $45 mark. But in case we see a rejection within the target area, expect one more new low in the formation of this wave C. And that is what I'm keeping my eyes on the short term. And jumping to the daily chart, to the 4-hour chart for further analysis and give you my long-term Elliot wave analysis, you can see that comp down here on the 10th of June gave us a low at around the $23 mark. Then we saw that massive run up in the formation of this wave 1, giving us a high above the $82 mark before we started a corrective structure in the formation of this wave 2 into the minimum retracement area highlighted on the charts using this yellow target area, which is an area that we have now fully maximized, and there are chances that we have a low in place for the second wave, and maybe we might continue gearing up impulsively in the formation of this wave 3. And for comp to confirm that we have a low in place, we need to first see a complete 5 wave structure here on the chart, followed by an ABC corrective structure. In case we see such a movement, then that will be suggesting that we have a low in place and we are now gearing up impulsively in the formation of that wave 3. And that is what I'm keeping my eyes on. Also on the indicators, you can see that we are holding above the $55 mark. That is the 55 mark on the RSI. On the MACD, we have been able to print a bullish cross, fully supporting higher prices. So let's be patient and see how that plays out, and I will be keeping you up to date.